Hello and welcome to this short session about tax relief for shared lives carers. Are you a shared lives carer? Would you like to know how much of your shared lives caring income is free from income tax? If your answer is yes to both of these questions, then you'll find this video useful. I'll explain what qualifying care relief is and how you can use it to work out your profit. First, I'll give you a little bit of background information. HM Revenue and Customs, I'll use HMRC from now on, treats shared lives carers as self-employed for income tax and national insurance purposes. This means you need to work out and pay any tax and national insurance yourself if there's any to pay. You do this by filling in a self-assessment tax return each year. You can find out more about registering for self-assessment on the gov.uk website. When you are self-employed, you may have to pay Class 2 national insurance, a set weekly amount paid twice yearly in January and July or monthly by direct debit, Class 4 national insurance, and income tax. The amounts you pay for Class 4 national insurance and income tax will depend on how much your profit is. You won't pay any Class 4 national insurance if your profit is below the threshold. If your profit is below your personal allowance for income tax, you may not have to pay income tax, but it depends on what other income you have each year. When you use the online tax return, it works out how much Class 4 national insurance and income tax you have to pay as you fill in your details. You'll find information about the rates for national insurance and income tax on the gov.uk website in the Money and Tax section. Before I explain the tax relief available for you, I'll say a little bit more about profit from self-employment. When you're self-employed or working for yourself, you have to keep details of all the money you receive. This is usually called your business income or turnover. In this example, this is £50,000. You don't pay tax on all of your business income. First, you take away the cost of running the business and items you buy for the business, usually called business expenses. You have to keep detailed records of all your business expenses. In this example, this is £20,000. This then leaves you with a business profit of £30,000. You use the £30,000 to work out your income tax, not the £50,000 business income. Some shared lives carers choose to use this method to work out their profit from shared lives caring. If you want to use the profit method, follow the general guidance for self-employment on the gov.uk website. Most shared lives carers prefer to use qualifying care relief, and I'll now explain how to use qualifying care relief to work out your profit. Qualifying care relief makes it a lot easier to work out your profit. It also makes keeping records easier. Qualifying care relief is available for shared lives carers who arrange to provide shared lives care with one of these organisations: local authorities, Health and Social Services or HSS trusts in Northern Ireland, health service bodies, or voluntary shared lives schemes. You're a shared lives carer when you agree to share your home and family life with another person, a service user, and you receive payments from one of these organisations for doing so. If you make private arrangements with family or friends to care for someone, then you cannot use qualifying care relief. Follow the usual self-employment rules and use the profit method in those cases. When you use qualifying care relief, there's a limit to the number of service users you can have in your home at any one time. This is called the placement cap, and you can use qualifying care relief for up to 3 service users at any one time. You could have a different service user every week during the year, 52 service users in total. You'll still be within the placement cap as long as you never had more than 3 at the same time. If you do ever have more than 3 service users in your household at the same time, then you have to use the profit method. You should count brothers and sisters placed together as one service user or placement. So, you could have Simon and Sue, who are brother and sister, and 2 other service users. You'd have 4 people, but only 3 service users, and you can use qualifying care relief. This placement cap applies to your household, not just to you as an individual. So if you share your home with another carer, you can have a maximum of 3 service users between you, not each. If you or anyone in your household is a foster carer, don't include foster children when you consider the placement cap. You could have 3 service users and any number of foster children in your household and still use qualifying care relief. When you use qualifying care relief, you'll refer to the payments you get from the Shared Lives organisation and your service users as your total receipts. This is your income from Shared Lives caring. You can then take away a qualifying amount instead of your expenses to find out your profit. This saves you having to work out all of your expenses item by item and keeping loads of shop receipts. I'll now explain each of these terms in a bit more detail. Your total receipts will be everything the Shared Lives organisation and the service user pay to you. As most service users are adult, you'll often find that you receive payments from the Shared Lives organisation and payments from the service user. All these payments count as part of your total receipts. It will include payments such as payments from the organisation and any holiday and respite payments, payments and rent received from service users, and expenses and petrol allowances to attend meetings with or for your service user. You need to include everything you receive from the organisation and your service user. We'll now find out how to work out your qualifying amount. A qualifying amount has 2 parts: a fixed amount and a weekly amount for each service user. The qualifying amount covers all of your costs and expenses. Instead of keeping shop receipts for every outing and all the food you buy for the service user, the qualifying amount covers everything. The fixed amount is a yearly figure. It's £10,000 for each household for a full year. If you haven't been a Shared Lives carer for a full year, then you can't use the full £10,000. You need to adjust the figure. For example, if you start Shared Lives caring halfway through the year, then you can only use half of the fixed amount, in other words £5,000. You'll also need to adjust the fixed amount if you stop being a Shared Lives carer during the year. If you share your household with another carer, you have to share the fixed amount. Remember, the fixed amount is for each household, not for each carer. As well as the fixed amount, you have a weekly amount for each service user. The weekly amounts are £200 for children under 11 years old and £250 for adults and children aged 11 and above. Each week runs from a Monday to Sunday. If a service user is with you for part of a week, then you use the full weekly amount. For example, a service user stays with you for 4 days: Saturday, Sunday, Monday and Tuesday. Most carers would only expect to use £250, but you can use 2 times £250 as the service user has been with you for 2 part weeks. Remember, each new week starts on a Monday, so Saturday and Sunday are in week 1 and Monday and Tuesday are in week 2. Let's now work out the qualifying amounts for a full year. If you've been a Shared Lives carer for a full year and there are no other carers in your home, you'll have a fixed amount of £10,000 for a full year. If you've cared for a service user for the full year, then you add 52 times the weekly amount of £250, which is £13,000, to make a qualifying amount of £23,000. Remember, these figures would only apply if you care for a service user for a full year. This may not always be the case. Some of you will have been carers for a full year, and others will have started or finished during the year, so the fixed amount can vary. It's unlikely that all of you would ever care for the same number of service users for exactly the same periods each year. So your qualifying amount is your individual amount. You need to work out your own qualifying amount each year. Now let's find out how to use the qualifying amount to work out the profit for Joan. Joan became a Shared Lives carer halfway through the year. There are no other carers in her home. She uses half of the £10,000 fixed amount as she's been a Shared Lives carer for half of the year, so that's £5,000. During that time, she cared for 2 service users. For Jane, who stayed with her for 18 weeks, she uses 18 times £250, which is £4,500. And for Anne, who stayed for 10 weeks, she uses 10 times £250, which is £2,500. When she adds these 3 figures together, she has a total qualifying amount of £12,000. But has Joan made a profit? To answer this question, we now need to find out how much she's received from her Shared Lives organisation and from her service users. In this example, Joan has £11,000 in total receipts from her Shared Lives organisation and service users that year. So when we take away her qualifying amount of £12,000, there's no profit. Joan will not pay income tax or Class 4 national insurance on her Shared Lives caring income that year. This is because her qualifying amount is more than the Shared Lives care income she received. This means her receipts are exempt from income tax and Class 4 national insurance for that year. But Joan cannot assume that she will always be exempt from income tax and Class 4 national insurance. She needs to check her figures every year. Let's now consider what happens if the total receipts are more than the qualifying amount. In this example, Luke has been a Shared Lives carer for the full year. There are no other carers in his home. Luke uses the fixed amount of £10,000 for a full year. He adds the weekly amounts for the 2 service users he cared for during the year. 48 weeks at £250 for John, which is £12,000, and 10 weeks at £250 for Mark, which is £2,500. His total qualifying amount is therefore £24,500. To work out his profit, he uses his total receipts of £30,000 and then takes away his qualifying amount of £24,500. His total receipts are more than his qualifying amount, and he has a profit of £5,500. So Luke uses this figure to work out any income tax and Class 4 national insurance due. Before I finish, I'll briefly mention the records you need to keep. Keeping records helps you to work out your profit and fill in your tax return when the time comes. When you use qualifying care relief, you need to keep records to show your total receipts. In other words, details of your payments for Shared Lives caring for the year. If you started or finished being a Shared Lives carer during the year, you need to work out how much of the fixed amount you can use. Keep a record of your start or end date as a Shared Lives carer. To work out the number of weeks you care for each service user, the dates service users arrive and leave must also be recorded. If you care for children, keep a note of the date of birth of each child. You can keep your records on a computer or on paper. Do whatever you'll find the easiest. It's a good idea to have a regular time set aside to update your records throughout the year. You'll find more information about tax returns and making payments to HMRC on the gov.uk website in the Money and Tax section. Before I go, I'll just suggest a few things for you to do later. First, set up and make sure you're keeping all of the records you need. If you'd like a more detailed session, there's a Shared Lives Carers online seminar on the HMRC website. Use the gov.uk website to find out more about self-assessment, rates of income tax and national insurance. Thank you for viewing this HMRC video.